Imagine standing on a shoreline. The sea is calm, eerily calm. No crashing waves, no storm clouds, just silence. But if you listen closely, you can hear it. A low, unsettling rumble deep beneath the surface. The kind of sound that makes the hairs on your arm rise because you know something massive is about to break. That's Hedera. That's HBAR. On the surface, the chart looks flat, almost lifeless, but don't be fooled. This isn't stagnation. It's compression. Underneath, forces are tightening like a coiled spring, winding up with institutional whispers, ETF murmurs, and enterprise adoption signals that are too big to ignore. HBAR isn't just another altcoin floating in the crypto tide. It's positioning itself as the infrastructure layer for enterprise-grade adoption. And when this coil finally snaps, the move won't creep upward like a slow tide. It will erupt like a storm surge. Violent, sudden, and impossible to ignore. This is the calm before the storm. And the most dangerous mistake right now is looking away. Stay locked in, because by the end of this breakdown, you'll understand exactly why BAR's quiet moment is the loudest warning signal you'll ever see. Don't just watch this storm form from the sidelines. Hit subscribe, turn on notifications, and dive deeper with me, because what's coming for HBAR could change the entire crypto landscape. BAR's chart right now doesn't just look like consolidation. It looks like a beast chained down, pacing restlessly in the dark. Weeks of sideways drifting, volume thinning to a whisper, traders yawning and calling it dead money. But zoom out and the story shifts. Suddenly, the pattern isn't random noise. It's structure. It's discipline. It's accumulation. And if you've been in this game long enough, you know who thrives in boredom. Institutions. They love this kind of silence. While retail panics or loses interest, they sit in the shadows, scooping up supply, testing support, flushing out weak hands with surgical precision. It's the oldest trick in the book. Starve the market of excitement, lull it into apathy, then strike when nobody's paying attention. Look closely and the clues are there. Each dip into support doesn't break it, it reinforces it. Each rejection at resistance doesn't weaken the move, it loads more pressure into the coil. It's like a dam under strain. Water keeps pressing, the cracks widen, and everyone downstream thinks the river is calm. Until one day the wall doesn't hold. And when it breaks, it's not a trickle. It's a flood. This is where the silence turns sinister. Because markets, like nature, obey cycles. Bitcoin in 2015, Ethereum in 2017, XRP in 2020. Before their violent ascents, the charts all sang the same eerie tune. Low volume, flat ranges, a stillness that felt unnatural. And then the explosion. Charts don't lie. They whisper warnings long before the roar. HBR right now is pressing against its ceiling. Resistance hardened over time like tectonic plates grinding beneath the earth. Support below has been tested, defended, fortified. Every retest hammers it into steel. Every touch of resistance is like a tremor before an earthquake. Pressure doesn't vanish. It builds. You can't see it on the surface, but beneath, the stress is unbearable. And when tectonic plates shift, earthquakes don't whisper. They roar. But here's the difference between this setup and a simple speculative pump. HBAR isn't moving in isolation. Beneath the charts, the fundamentals are aligning in a way that feels orchestrated. Enterprise adoption whispers, ecosystem growth murmurs, and in the background, the ETF drumbeat grows louder. ETF whispers change everything. They're not just a narrative. They're a spotlight. Suddenly, a token shifts from shadow to stage, from interesting altcoin to institutional play. We've seen it with Bitcoin. We've seen the domino effect with Ethereum. And when whispers turn to filings, filings to approvals, approvals to inflows, price action doesn't crawl. It ignites. BAR's chart right now feels like a prelude. A movie scene where the air grows too still, where birds stop chirping, where the silence itself becomes unbearable. Traders call it boring. Veterans call it preparation. And when the storm finally hits, it won't be gradual. It will be violent, decisive, and merciless to those who slept through the warnings. The calm before the storm is ending. And the charts are telling us, louder than words, something is coming. For years, the worlds of traditional finance and cryptocurrency existed on separate planes. Traditional finance was a landscape of established institutions, regulations, and familiar instruments. Cryptocurrency was a volatile frontier of innovation and decentralization. The bridge between these two worlds has been the exchange-traded fund, ETF. We've seen this transformation firsthand. The journey began with a quiet circling of institutional players around Bitcoin and, later, Ethereum. The approval of ETFs for these assets acted as a golden ticket, providing major financial institutions and wealth managers with a regulated way to gain exposure without the challenges of direct ownership. The result was a monumental influx of capital, a validation of the asset class, and a surge in price discovery that forever changed the market. Now, as the dust settles, those same institutional players are searching for the next opportunity. The chatter is pointing toward networks that offer stability, governance, and real-world utility. This is where Hedera HBAR stands out. Hedera isn't just another blockchain. It has what Wall Street values: predictability and enterprise integration. Its governing council includes global corporations like Google, IBM, Boeing, and LG. This isn't a speculative group. It's a list of Fortune 500 companies lending their names and strategic direction to the network. This level of established governance provides a crucial layer of trust and stability for institutional investors. If an ETF were to circle around HBAR, the market implications would be profound. Considering Hedera's current market capitalization is a fraction of Bitcoin's, a similar capital influx could create a seismic liquidity shock. This presents a unique opportunity for asymmetric upside, the kind of leverage institutions crave. It's like finding a company with blue-chip partnerships trading at a penny stock valuation. For sophisticated investors, this isn't just a trade. It's a potentially transformative opportunity. Crucially, institutional interest isn't built on promises alone. It's built on tangible, real-world adoption. This is where Hedera is building a significant advantage. The network is focused on solving enterprise-level problems, from enhancing supply chain transparency to managing carbon credits. This focus on practical application is a powerful magnet for institutional capital. They're not betting on a dream. They're investing in a network that is actively shaping the future of how businesses operate. The world of cryptocurrency is often filled with noise, speculative hype, meme coins, and a constant stream of promises about a decentralized future. But beneath the surface, a more fundamental and far more significant evolution is taking place. While most of crypto talks about use cases as a future possibility, a theoretical blueprint for what might one day be, Hedera is quietly doing it today. This isn't about a white paper or a roadmap. It's about infrastructure being plugged into the gears of the global economy. Consider the evidence. Avery Dennison, a global leader in labeling and packaging, is leveraging Hedera to bring a new level of transparency to supply chains, tracking billions of items and their environmental footprint. Dovu is using the network to create a transparent, scalable marketplace for sustainable carbon credits, empowering projects that remove carbon from the environment. And in a groundbreaking partnership between major financial institutions like Shinhan Bank and Standard Bank, Hedera is being used to conduct pilots for near-instantaneous financial settlements, slashing the time and cost of cross-border transactions that have traditionally taken days to clear. Even governments are paying attention, with pilots exploring the use of Hedera for the tokenization of assets and central bank digital currency, CBDC, research. This is not a meme coin hoping for a viral tweet. This is the quiet, methodical work of building the pipes and plumbing of a new digital economy. To understand the true significance of this, we need to draw a parallel from recent history. The Internet in the 1990s. In its early days, the Internet was defined by its consumer-facing novelty. People were excited about email, chat rooms, and flashy GeoCities websites. The conversation was about personal communication and entertainment. However, the real world-changing revolution didn't come from these front-end applications. It happened when enterprise adoption kicked in, when logistics companies began using digital networks to track shipments, when banks moved to online platforms, and when global supply chains were quietly digitized behind the scenes. This enterprise-level integration, invisible to the average user, was the true engine of the Internet's explosive growth and lasting impact. Hedera is at that same inflection point. The flashy, speculative noise of the broader crypto market dominates headlines, but the quiet, deliberate integration of Hedera into the real-world systems of global corporations and governments is what truly sets it apart. While others are building digital theme parks, Hedera is building the digital power grid. And history shows us that the market always catches up to utility. The Internet didn't just become valuable overnight. Its value grew as its foundational infrastructure became indispensable to the global economy. The same principle applies here. When real-world adoption starts to scale, the market will inevitably wake up. The question isn't if the price of HBAR will reprice to reflect its fundamental utility and adoption. The question is how violently it will happen once the world realizes the infrastructure has already been built, tested, and is now being used to power the very institutions that govern our global financial and commercial systems. Perfect storm is brewing. All the elements required for a major market re-rating are not just present. They are actively converging. This is not a matter of idle speculation. This is a classic market setup, a financial pressure cooker where a buildup of fundamental energy, without a corresponding outlet, is destined to find an explosive release. Consider the factors at play. The price chart itself tells a story of increasing tension, with a long period of consolidation that is coiling tighter with every passing week. This is a technical sign that a major move is imminent. Simultaneously, the undercurrent of institutional interest continues to grow. These aren't just retail investors chasing a trend. These are multi-billion-dollar firms, wealth managers, and pension funds. Their quiet whispers about Hedera ETFs and its potential as an enterprise-grade investment are laying the foundation for a surge in demand far beyond what the current market can handle. This is all happening while real-world adoption is spreading quietly like roots underground. The partnerships with global corporations are not just announcements. They are deep integrations that are creating a tangible, increasing utility for the network. This utility, in turn, is creating a new source of organic demand for HBAR, a demand that has not yet been fully priced in by the broader market. When the market finally recognizes the scale of this adoption, the discrepancy between the network's value and its price will be too great to ignore. This is a scenario we have seen before in crypto, where projects with strong underlying fundamentals but a low-profile period suddenly reprice with breathtaking speed. Think back to XRP in 2017. For years, it was a quiet project, largely ignored by the mainstream, before it exploded to become one of the year's best-performing assets as its utility for cross-border payments gained traction. Or consider Solana in 2021. It was dismissed by many as a competitor, but once its ecosystem of dApps and NFTs ignited, the price violently repriced, punishing those who hesitated and rewarding those who had the foresight to position themselves early. Hedera has this same explosive setup, but with a critical difference: the corporate backing that those projects never had. This isn't just a community of developers. It's a consortium of the world's most powerful companies. This backing provides a level of legitimacy and long-term security that makes Hedera's potential even more compelling to institutional capital. The inevitable move won't be linear, it won't be gentle, and it won't give everyone a fair chance to position themselves. It will be violent and swift, the kind of market event that punishes hesitation and richly rewards conviction. The pressure is building, and the question isn't if the steam will escape, but how violently it will happen once the world realizes the infrastructure has already been built and the institutions are already circling. Paradigm shift hiding in plain sight. Right now, if you only look at the surface, Hedera appears as the calm before the hurricane. The price might seem flat, and the daily charts might appear uninspiring to those chasing fleeting hype. Traders can get bored, and retail attention often drifts to the next viral token. But this tranquility is a profound illusion. Beneath the surface, a storm is not just brewing. It is gathering immense, fundamental force. The engine of this storm is being fueled by a relentless buildup of real-world adoption, institutional interest, and strategic partnerships. We've talked about the quiet, consistent work Hedera is doing, the integration with global supply chains, the pioneering work in carbon credits, and the quiet but powerful financial pilots with major banks. These aren't just bullet points on a roadmap. They are the roots of a new digital economy spreading underground. The whisper of Hedera ETFs is the first sign that this hidden growth is being noticed by the giants of traditional finance. When the dam of institutional capital finally breaks, the move will be so fast and so sharp that the ones who slept on it will be left watching from the sidelines, wondering how they missed the signs when they were so clear. The next move for HBAR won't be a gradual climb. It will be a violent re-rating of value, the kind of market event that punishes hesitation and rewards conviction. Think of the explosive repricing of XRP in 2017 or Solana in 2021. Hedera has that same explosive potential, but with a critical difference: the corporate backing and established governance that those projects never had. This isn't a speculative bet on a new technology. It's a strategic position on the digital infrastructure of tomorrow. The question isn't whether HBAR will move violently. The question is whether you will be positioned before the wave hits, or scrambling after it's already crashed ashore. Because storms don't wait, and neither will Hedera. This is a paradigm shift hiding in plain sight. It is bigger than a chart pattern and more significant than a speculative bet. It's the moment a quiet, foundational technology is discovered by the world. So, if you've stuck with us this far, ask yourself this: when the wave comes crashing, do you want to be swept away, or riding it? Stick with this channel. Because when the tide turns, when the institutions make their move, and when Hedera finally erupts, you'll want to be the first to know. The calm is ending. The storm is coming. And Hedera HBAR is about to move violently.